Jensen Huang just went on record to deny something Wall Street insiders have been whispering about for weeks. And what he said next? It's about to shift billions of dollars in the AI industry. The world's most powerful chip company is making its largest investment ever. And the target? OpenAI. But here's what nobody's talking about. Why did Jensen feel the need to publicly deny he was unhappy with Sam Altman in the first place? Stay with me, because the answer reveals everything about where AI is headed in 2025. On January 31st, 2026, in Taipei, Nvidia CEO Jensen Huang made a statement that sent shockwaves through the tech industry. Standing outside a restaurant where he had just hosted what Taiwanese media dubbed the $1 trillion dinner, a gathering of Nvidia's key suppliers, including TSMC, the world's largest contract chip maker, Huang addressed reporters with an unusual sense of urgency. "We are going to make a huge investment in OpenAI," Huang declared. But he didn't stop there. He called it probably the largest investment we've ever made. Let that sink in for a moment. Nvidia, a company worth over $1 trillion, a company that has made countless strategic investments, is about to write its biggest check ever, and it's going to OpenAI. This isn't coming out of nowhere. Back in September 2025, Nvidia announced plans to invest up to $100 billion in OpenAI. The deal made perfect sense on paper. OpenAI gets the cash and guaranteed access to the advanced chips that power ChatGPT and its AI models. Nvidia secures a dominant position with the company leading the AI revolution. But something happened between September and now. And that something is what makes this story fascinating. On January 30th, just one day before Huang's statement, the Wall Street Journal dropped a report that changed the narrative. According to their sources, the $100 billion investment had stalled. People inside Nvidia were expressing doubts. And Huang himself had been telling industry associates that the original agreement was non-binding and not finalized. But it gets more interesting. The journal reported that Huang had privately criticized OpenAI's business approach, calling it undisciplined. He had expressed concerns about the fierce competition OpenAI faces from Google and Anthropic. Which brings us back to Taipei. Huang didn't just announce the investment, he vehemently denied the Wall Street Journal's characterization. "It's nonsense to say I was unhappy with OpenAI," he told reporters. He praised OpenAI as one of the most consequential companies of our time and said he really loves working with Sam, referring to OpenAI CEO Sam Altman. When pressed about whether the investment would exceed $100 billion, Huang clarified, No, nothing like that." He left it to Altman to announce the exact amount OpenAI wants to raise. So what's really going on here? To understand this story, you need to see the full picture of what's happening with OpenAI's funding right now. According to Reuters, OpenAI is looking to raise up to $100 billion in total funding, not just from Nvidia. This round would value the company at approximately $830 billion. To put that in perspective, that's more than the GDP of entire nations. And Nvidia isn't the only tech giant opening its wallet. Reuters reported on January 30th that Amazon is in talks to invest dozens of billions in OpenAI, with the figure potentially reaching $50 billion. Think about what this means. The two companies that provide the critical infrastructure for AI, Nvidia with its chips and Amazon with its cloud computing through AWS, are both betting enormous sums on OpenAI's continued dominance. This isn't just about investment, it's about control of the AI supply chain. OpenAI needs Nvidia's chips. The H100 and upcoming B200 GPUs are the gold standard for training large language models. Without access to these chips, OpenAI can't maintain its edge over competitors like Google's Gemini or Anthropic's Claude. But Nvidia also needs OpenAI. As the most visible and widely used AI company in the world, OpenAI drives enormous demand for Nvidia's products. Every ChatGPT query, every image generated by DALL-E, every line of code written by GitHub Copilot, all of it runs on Nvidia chips. This is a symbiotic relationship. But like all relationships, it requires trust, alignment, and mutual benefit. So why did the Wall Street Journal report tensions? Let's break down the concerns that were allegedly raised inside Nvidia. First, business discipline. OpenAI has been burning through cash at an extraordinary rate. The compute costs alone for running ChatGPT are staggering. Estimates suggest hundreds of millions of dollars annually. For Nvidia executives looking at a 9 or 10-figure investment, questions about fiscal responsibility are legitimate. Second, competition. When Nvidia first announced its September investment plans, OpenAI had a clearer lead over competitors. Since then, Google has made significant strides with Gemini. Anthropic has gained traction in the enterprise market with Claude. The landscape is more crowded, more competitive, and less certain. Third, the non-binding nature of the original agreement. In high-stakes investment deals, non-binding agreements are common in early stages, but they also provide an exit ramp if conditions change. The fact that Nvidia insiders were emphasizing this point suggests some internal debate about whether to proceed. Now, let's return to that detail about the trillion-dollar dinner in Taipei. This wasn't just a social gathering. Huang had assembled Nvidia's entire supply chain, including TSMC, which manufactures Nvidia's most advanced chips. The timing is significant. Taiwan is the epicenter of global chip production. TSMC produces not just for Nvidia, but for Apple, AMD, and virtually every major tech company. Any major investment by Nvidia in OpenAI has supply chain implications that ripple across the industry. By hosting this dinner right before addressing the OpenAI investment publicly, Huang was sending a message. Nvidia's commitments are backed by its ability to deliver chips at scale. If Nvidia invests in OpenAI, the infrastructure will be there to support it. What we're witnessing isn't just about one company investing in another. We're watching the consolidation of the AI industry in real time. Consider the players. Nvidia dominates AI chips with an estimated 80 to 90% market share in data center GPUs. Amazon dominates cloud infrastructure. OpenAI dominates consumer-facing AI applications with ChatGPT. When these three companies align through massive investments, they're not just forming partnerships, they're building an ecosystem that will be incredibly difficult for competitors to penetrate. There's another crucial element: chip scarcity. Despite Nvidia's massive production increases, demand for AI chips still outstrips supply. Companies are waiting months for chip deliveries. Some are offering premiums above list price. By securing a massive investment commitment from Nvidia, OpenAI isn't just getting capital, it's getting guaranteed chip allocation. In the current market, that access is arguably more valuable than the money itself. This is why the investment structure matters. According to the original September announcement, the deal would give OpenAI both cash and chip access. That second part, guaranteed access to H100s, B200s, and whatever comes next, is the real prize. How are OpenAI's competitors responding to this news? Google has its own chip division developing TPUs, tensor processing units, specifically for AI workloads. While they still lag behind NVIDIA's offerings in many benchmarks, Google isn't dependent on external chip suppliers the way OpenAI is. Anthropic, backed by Google's investment, has access to TPU infrastructure. They've also been securing their own NVIDIA chip allocations, though at a smaller scale than OpenAI. Meta has been building out massive AI infrastructure, ordering hundreds of thousands of NVIDIA GPUs for its own AI research and products. The message is clear. In 2025, AI competition isn't just about algorithms and models. It's about access to compute. It's about chips. And the companies that secure that access early will have a fundamental advantage. Let's address the $830 billion valuation that OpenAI is reportedly targeting. Is it justified? For context, that would make OpenAI more valuable than companies like Walmart, JP Morgan Chase, or Johnson & Johnson. It would place OpenAI among the top 10 most valuable companies in the world, despite the fact that it's not yet consistently profitable. The bull case. OpenAI has dominant mindshare in consumer AI. ChatGPT is a verb. Their enterprise products are being adopted by Fortune 500 companies. They're not just building tools, they're building infrastructure that could underpin the next generation of software. The bear case. Competition is intensifying, costs are enormous, The regulatory environment is uncertain, and it's unclear whether OpenAI's current lead is sustainable long term. Nvidia's investment and the size of it suggests Huang leans toward the bull case. But his earlier reported concerns about competition and business discipline suggest he's not blind to the risks. Throughout this story, one name keeps appearing: Sam Altman. Huang specifically mentioned his relationship with Altman, saying he really loves working with Sam. He deferred to Altman on announcing the final investment amount, saying, Sam is closing the round and we will absolutely be involved. This personal dynamic matters. Tech investments at this scale aren't just financial decisions, they're bets on leadership. Nvidia isn't just investing in OpenAI's technology, they're investing in Altman's vision and execution ability. Altman has proven himself to be one of the most effective fundraisers in Silicon Valley history. He survived a brief board coup in late 2023 and emerged stronger. He's navigated regulatory scrutiny, competitive threats, and internal controversies. From Nvidia's perspective, Altman is both an asset and a key dependency. If the relationship between Huang and Altman is strong, and both men say it is, that reduces one major source of risk in the investment. What does this investment mean for Nvidia's strategy going forward? First, it cements Nvidia's position not just as a chip supplier, but as a strategic partner in the AI ecosystem. By making its largest investment ever in OpenAI, Nvidia is signaling that it's willing to put its money where its chips are. Second, it creates a powerful reference customer. When Nvidia sells its next-generation chips to other companies, it can point to OpenAI's results. This is what the leading AI company in the world chose, is a compelling sales pitch. Third, it provides insight into future AI workloads. By working closely with OpenAI, Nvidia gets early visibility into what capabilities next-generation models will need. This informs their chip design roadmap, creating a virtuous cycle of co-development. The risk? Nvidia is concentrating a huge amount of capital and strategic focus on a single partner. If OpenAI stumbles, or if the AI market develops differently than expected, that concentration could be costly. For OpenAI, securing this investment solves multiple problems simultaneously. The obvious benefit is capital. Training frontier AI models costs hundreds of millions of dollars per model. Maintaining and improving ChatGPT requires constant investment. Building out new capabilities like advanced reasoning, multimodal models, and AI agents all require resources. But beyond capital, OpenAI gets chip security. In a supply-constrained market, knowing you have guaranteed access to the world's best AI chips is priceless. It allows OpenAI to plan long-term research roadmaps without worrying about compute availability. There's also a strategic moat. The deeper OpenAI's partnership with Nvidia becomes, the harder it is for competitors to catch up. Nvidia has limited production capacity. Every chip that goes to OpenAI is a chip that doesn't go to Anthropic, or a startup trying to challenge ChatGPT. The trade-off? OpenAI becomes more dependent on Nvidia. That dependency could limit OpenAI's flexibility in the future, especially if alternative chip architectures emerge or if Nvidia's interests diverge from OpenAI's. Zooming out, what does this mean for the broader AI industry? We're seeing the formation of AI alliances, clusters of companies with aligned interests and integrated technologies. The Nvidia OpenAI Microsoft Amazon cluster is one. The Google Anthropic cluster is another. These alliances will increasingly define competitive dynamics. For startups and smaller AI companies, the landscape is becoming more challenging. Access to capital is concentrating among a few well-funded players. Access to chips is concentrating even more. The barriers to entry for training frontier models are rising. But there are also opportunities. As the giants focus on general-purpose AI, there's room for specialized players. Vertical AI companies focusing on specific industries. Companies building on top of foundation models rather than competing with them. Open source alternatives that democratize access. We can't ignore the geopolitical context. The trillion-dollar dinner in Taipei wasn't just about business. It was a statement about the strategic importance of Taiwan in the AI supply chain. The United States and China are competing for AI supremacy. Export controls limit China's access to advanced chips. Taiwan's TSMC is the critical choke point in the global chip supply chain. By reinforcing relationships with Taiwanese suppliers while simultaneously investing heavily in OpenAI, an American company, Nvidia is navigating complex geopolitical terrain. This investment isn't just business strategy, it's part of a larger contest over technological leadership. If you're investing in this space, here's what you need to understand. The AI infrastructure layer, chips, cloud computing, data centers, is where the most predictable value is being created. Nvidia's dominance in AI chips gives it pricing power and profit margins that are exceptional by any standard. OpenAI and similar AI companies are higher risk, higher potential reward. The $830 billion valuation assumes continued dominance and successful monetization. Those are big assumptions. But if OpenAI succeeds in becoming the infrastructure layer for AI applications, the upside could be enormous. Watch the chip allocation patterns. Which companies are securing access to NVIDIA's latest chips tells you who has the resources and relationships to compete in frontier AI. It's a leading indicator of who will have capability advantages 12 to 18 months from now. If you're running a business and thinking about AI strategy, first, recognize that AI capabilities are increasingly tied to relationships with infrastructure providers. If your AI strategy depends on accessing frontier models or training custom models, you need to think about your chip and compute supply chain. Second, the major AI platforms, OpenAI, Google, Anthropic, Amazon, are going to be increasingly well-resourced and entrenched. Build your strategy around these platforms rather than trying to compete with them directly. Use their APIs, build applications on top of their models, and focus on domain-specific value creation. Third, diversify your AI dependencies. Don't bet everything on a single platform. The competitive landscape is still fluid. Having optionality in your AI stack gives you flexibility as the market evolves. If you work in technology, several trends are worth tracking. The integration between chip makers, cloud providers, and AI companies is deepening. This vertical integration will reshape how technology stacks are built and sold. Talent competition is intensifying. Companies that can secure access to both chips and top AI researchers will have compounding advantages. If you're building your career in this space, consider how your skills and relationships position you in this evolving landscape. Open source AI will become increasingly important as a counterbalance to concentrated power. Watch projects like Llama, Mistral, and others. They may not match frontier models in capability, but they provide competition and alternatives. Jensen Huang's statement in Taipei matters because it reveals where the smartest capital in tech is flowing. Nvidia didn't get to $1 trillion valuation by making bad bets. Their willingness to make their largest investment ever in OpenAI is a signal. But the fact that Huang felt compelled to publicly address the Wall Street Journal report also tells us something. There were real internal discussions at Nvidia about this deal, real concerns about competition, business discipline, and risk. What we're witnessing is the negotiation of power and value in the AI era. Nvidia has the chips. OpenAI has the consumer mindshare and the talent. Amazon and others have the cloud infrastructure. The question is, how do these puzzle pieces fit together, and who captures the most value? The answer will shape not just these companies, but the future of AI itself. Keep watching the actions, not just the words. Huang says he loves working with Sam Altman and believes in OpenAI. The investment is happening, but the exact amount is still being negotiated. In the next few weeks, we'll see how much Nvidia actually commits. We'll see what terms the investment includes. We'll see whether other investors follow Amazon's lead. Those details will tell us whether this is the full-throated endorsement Wang's public statement suggests or something more cautious. Either way, the message is clear. The AI wars are moving from the laboratory to the balance sheet, and the biggest battles are just beginning.